Hello everyone, and welcome back. So today as I sat down and began preparing my analysis for Bitcoin going into the week, I realized that I was omitting a certain key factor that I hadn't yet included in my previous videos. So as we should all know by now or begin to appreciate, the value that comes from a holistic approach to framing bias and narrative, not just in Bitcoin and crypto, but towards the market and the economy as a whole. So before I was just talking about Bitcoin and its relationship to the stock indices, where we had explored how the general sentiment in the stock indices often affects price in Bitcoin. At this point, we noted there's existence of an intermarket relationship between these two equity classes. This view is indeed useful, but it often ignores the bigger picture about the economy as a whole. For it is not enough to really view in isolation two correlated markets, particularly if they are so sensitive and dependent on a host of other economic factors. Now, I'm not suggesting you need a master's degree in economics or some other financial or social economic background, but I will encourage you to consider those key instruments of economic sentiment, like the dollar index, in your narrative and trading plan. For instance, when I want to trade Bitcoin, I need to have a feeling about the general sentiment surrounding equities in the moment. To do this, we obviously use the S&P 500. But I need to also consider what the dollar index is telling me about risk. Generally speaking, if the dollar is bullish, we expect lower prices in equities, so in stocks, and in foreign currencies. So this is otherwise known as a risk-off scenario. On the opposite end of the spectrum, if the dollar is bearish, we expect higher prices in equities and foreign currencies. While this theory is definitely worth discussing more in the future, for now I will end the discussion there. This will be useful enough for our current bias and discussion about framing narrative. So, what do we mean by narrative? Well, consider this fractal before you and the annotated chart it provides. Now, it is all good and well to be able to dissect a subsection of price action, but without narrative or bias, how do we know how to frame the information it provides us? And how do we use it to trade? Let us consider then the narrative around this price action. Let us move to a 1-hour chart. Price closes near the high of the week, completing a market maker buy model. Price also completes a rebalance of a high time frame point of interest, which was discussed in my last video. Because price has reached this high time frame target on a predictable day, it is worth considering a retracement. But this idea is only formally given precedent on the back of a bullish dollar. So if we head over to the DXY, we notice a bullish trend continuing over the weekend into the first half of the week, with the weekly high quickly swept on Monday. This is the framework needed as we observe the weekly open in the stock market. Because we have a strong dollar into Monday, and because we are at a high time frame rebalance, we should observe closely how the S&P 500 performs on Monday morning. Price gaps on its weekly open, and it attempts to recover, but is quickly rejected. This downtrend continues into the early hours of Monday morning. As price spools down on the 1 hour, we create a fair value gap. This will be the target for a Judas swing into New York kill zone. So we should consider at this point what is the more likely scenario. Having created a fair value gap due to aggressive repricing overnight on Sunday into Monday morning, what is the likely scenario to occur on Monday? Yes, we are likely to rebalance this fair value gap. But this could be, and which is very likely, part of a manipulation phase in which shorts have already been accumulated, and a push higher will be part of an attempt to lead other traders or retail traders into thinking that price was actually going higher. But we have the benefit of a holistic approach in our narrative. So now you might be thinking, what does this mean for Bitcoin? And what does this mean for the stock market? Well, consider this chart in front of you. Where exactly are we at the moment? Study this chart carefully. We are currently at a discount of our dealing range, and we are currently at an area of support. Below us, we have a fair value gap, which we touched this morning, and we have taken sell-side liquidity marked by the presence of relative equal lows. By following our model, we would expect price to hold as support at this area. This is our dealing range, and we are currently within the discount of the dealing range. This area should provide some support going into the rest of the week. Now let's jump over to a Bitcoin chart on the 1 hour. So on the S&P 500, as we tag in the sell side liquidity, at the same time on Bitcoin, we're reaching for the swing low, right? So with those two confluences in hand, we provide a little bit of support at this zone. Now, as a general rule of thumb, if you go over to Twitter and you try and gauge the sentiment, have a look at what people are saying. Seems like everyone is quite bearish on equities at the moment. And the trend normally follows that the majority of people are wrong. So when people are bearish, just remember that we are at support. That's all I'm going to say. So I want to jump over back to S&P 500, go down onto the 5-minute chart here. And I just want to show you something here that happened on Monday. So if we overlay our fancy annotations, cool, that's all good. Let's have a look at this. Okay, so this green box, this is where short positions are going to be accumulating the majority of their positions. So this is part of your accumulation phase. This normally happens at or around midnight opening or just above. Okay, then your manipulation phase happens here, Judas swing, New York, right? Maybe gives a sentiment or the perspective that price wants to go higher. So this is part of the manipulation. And then the PM session and going overnight, we see the sort of distribution of price lower. Okay, so this is part of a theory called accumulation, manipulation, distribution, and can happen on a daily time frame, and on a weekly time frame. I think it's something I'll discuss a little bit more in the future. Another thing I have here, which is important and I wanted to show you guys, was this SMT divergence we had just after New York Open during the New York kill zone. So we had a bit of a stop run, a stop hunt here below these lows. So this is accumulation of longs. So how do we know that this is a stop run and an accumulation and not just price going to go lower? Well, one of the main indicators we can use is we can use a relative strength leader like the NASDAQ to confirm whether or not this is an accumulation. So in the NASDAQ, which is over here, this is the NASDAQ chart, at the same period in which S&P 500 is making a lower low, the NASDAQ is saying, nope, that's a relative strength leader, it's making higher highs, wants to push up. This gives us confidence that this is not just a breakdown and that this is a stop hunt. All right, so you want to look for these sort of indicators during the New York kill zone, not just randomly, right? So during the kill zones, New York kill zone, and London in the morning, and during the PM session. Then the next thing I just want to point your attention to is this run below sell side liquidity happening just before the close, right? So I have here compare the dollar index at the same time. What is it doing? So go over to the dollar. Let us put that on. So what I was having a look at here, basically, when I saw those lows being taken, I thought, okay, well, what's the dollar doing? If you go over to the dollar, you'll see that it was in the process of rallying, but it was just rallying just above its old high. And then I thought, okay, well, um, the probability is that prices is just going to break this high and go low. That's what I was thinking. That's what I had in mind, right? I was thinking, okay, no, actually, um, I'm expecting a retracement on the dollar. And that sort of gave me confidence in this area holding as a little bit of support. I wasn't expecting like a reverse or anything. I was just sort of expecting um, a little bit of a bounce. And this is just another example. And as an example, I wanted to show you about the intermarket relationship. Always monitor the dollar. What's the dollar doing? How's it performing? Okay, and give you a heads up on these moves. But you know, do it at important times. For instance, when we near the lows, okay, or up at the highs, or were you looking for a divergence? Cool. So heading over to Bitcoin, and I know that's probably why most people are here. I just want everyone to remember a little bit of what we talked about just before with the context of the dollar index and where price was in the indices, right? And how during the weekend in Bitcoin, we just were repricing lower after the completion of the bar model on Friday. That stuff that I was discussing on my last video, all of this stuff, setting up pretty much a sell model. What we were aiming for some internal range liquidity marked at a 4-hour fair value gap. If you go onto my last video, you know which one we were aiming for. And we did tag that level. And we actually continued going further down, which is perfectly fine, not a problem. So the only real notable thing that I want to talk about on Bitcoin is Tuesday's, so Monday's Asia range. So this gives us 3 standard deviations targets for targets to the downside and to the upside. And we see a nice sort of target here, 2 standard deviations, Asia range, and potentially the week's low. Okay. So what I'm going to do next, I'm going to take all of the stuff off and stuff here, and I'm going to leave on this image right here. Now, this I call no man's land. Believe it or not, this is a very tradable area. And by looking at the correct information, you can actually scalp trade this very accurately. And I'm going to show you some examples here. This is really cool stuff. I suggest you pay attention. So here we are on a 1-minute chart. So how do we scalp trade this when price is coming down? Well, what I do is the first thing I do is I look for any sign of strength. So I'm looking for divergence between our intermarket pairs. So in this case, our pair is the S&P 500. And because we're making lower lows on Bitcoin, while at the same time, the S&P refusing to go lower. So this, and I see this picked up right here. This is the first sign that I see this. Then I am already starting to think that potentially selling is getting a bit exhausted or ready for a small rally. Now, what other information can we use to give us a confluence that this is an area to potentially take a scalp trade? Well, let me show you what I got here. So I posted on, well, I've set up a Telegram channel for anyone that wants to join. They can join it. So on the Telegram, I've got my learning modules that I've been developing. The first one is fair value gaps, imbalances, and market rebalance theory. So that is a PDF document you can download. You can check it out. This is some other related content I've been working on. You can also check that out. So I was giving, on here I was just posting some of my thoughts for Monday and Tuesday, and here is that section of price action we were discussing here. So I call this no man's land scalp. So we use the relative strength leader on SPOOs, and on here we have, so this is the tick chart on Atos, so I used to trade Bitcoin. So here we have a bunch of liquidations. We have late shorts getting trapped, and we confirm CVD divergence, a hidden bullish divergence. So these three indicators tell me that we potentially are due for a rally, as positions that are shorting or long in early getting liquidated, those shorts are taking profit, and at the same time, coming out of the level, we have some open interest. All right, so that's further giving me confluence in thinking that this is a level that wants to be looked at. So I was giving this pretty much in real time as it was happening. Equally, I've done the same here. A whole explanation. This was within a couple minutes of it happening. You can have a look at the timestamp, and you can have a look at the time it was happening on the charts. It was pretty much within 5 minutes. So it's not, listen guys, it's not a signal group or anything like that, but this is strictly educational content, and I'd love any feedback from you guys in regards to this information. If you find it useful, if you need me to add anything, I can have a look at doing that. Lastly, I want to show you some of the stuff I've been working on. So this will be the first of my learning modules, or the second, I suppose, of my learning modules. This one is how to scalp using Atos software. So I'm busy working on that. I've got many examples I need to go through and just compile my thoughts. So if you guys are interested in this information, you're welcome to join the Telegram. All this information is free. I don't really care. I like doing it. I like doing it for my own benefit. The more I do it, the better I get. And you know, the way I think about it is, if I can create a like-minded community where people are there to give feedback, give their own opinions, and just create an environment of learning, I really enjoy that, and I want to use that, to better myself and for you guys to better yourselves. So definitely have a look at joining the Telegram. I'll leave it a link in the description, and we can go from there. But I think I'm gonna leave it as like that for today, and I'll catch you guys later in the week. So later.